Thank you very much. Sorry for my hesitancy. We're almost on time. We're under the watchful eye of the little red square. You may have noticed it on the screen, so that's a reminder that we need to keep time discipline, or at least that's my interpretation. I'm Nicolas Véron. I work at Bruegel here in Brussels and at the Peterson Institute for International Economics. I'm very grateful to Better Finance for the invitation to moderate this panel after Tanya's thoughtful remarks. Because she just spoke, she will speak last, and in the meantime, I will ask each of the panelists to make very succinct initial remarks. Remember the little red square? And then we'll have a conversation, which I hope will be a genuine conversation and involving also all of you in the room. So with that, I will, you start.
Okay. Well, thank you for passing me the floor. I will succinctly repeat what's been said by my managing director, but also
you don't have to do that.
Bring a few quick perspectives. It's a very complex file for retail investors. Of course, they don't know all the market plumbing and how it is always structured. However, as removed that it is from the everyday investor, it can have an impact on the conditions, of course, of market access and the trading conditions. So the cost they pay, the products available to them, and the quality of execution they received. Of course, reliability of settlements is important, and the consistency of protection across member states is dear to Better Finance. So improving market plumbing really needs to translate into improving the outcomes for retail investors. And this can be done in several ways that we'd be happy to discuss. But less intermediation would be also a great step with efficient systems. And I mean, it's one big piece of the puzzle of the SIU. Others are still missing, being discussed. For example, here we can also discuss links to shareholder rights and how the custody chain or the intermediary chain is sometimes inefficient. It also is a reminder that trading and post-trading systems needs to be more operationalized across the EU. And I will stay succinct and say that implementation also timing matters, and we should not delay further capital market integration. So scaling can improve and competition can remain core for products and accessibility outcomes for retail investors. Thank you.
Thank you so much also for your admirable time discipline. The little red square is happy. Eglantine?
Should I press somewhere? No, can you hear me? Here. Good afternoon, everyone. So thank you so much for giving us the opportunity to discuss this very important topic about European market integration, and especially when it's for the benefits for European citizens and investors. So my name is Eglantine Desautel. I'm the CEO of EuroCTP. EuroCTP is a very technical element of the Capital Market Union and now SIU, but very important. So I'll try to be very clear in explaining what it is about. So our objective is to facilitate access to EU market data by aggregating all trading and market activity across EU venues into one single feed and broadcasting this feed to the different industry participants and also to retail. So for the first time, Europe will be equipped with a regulated and single source of reference when it comes to trading in the EU. So concretely, what we will do is aggregating all the different data from the 180-ish markets available across Europe to trade equities and ETFs, and aggregate this data into and provide real-time to everybody the list of all trades done across Europe, so with all information, quantity, price, venue of execution, and several other elements. So for the most technical experts, it's all the flags, MMT flags, and all the MiFID flags giving indication on the type of trades we are talking about. We will also provide with value of reference when it comes to value of amount of trading across Europe. That's something that is very important, notably to help trigger and feed this virtuous cycle in order to develop investment on European instruments. And last, we will aggregate what we call the European best bid and offer, so that's the aggregation of the best limit sell and buy and sell available across Europe, not attributed. So why is all this very important? So if we go to the smaller level, that's for the industry, it allows to give a value of reference. So I always take this example of asset managers. Usually their investment policy is mentioning a cap as a percentage of the average daily volume. If we make this average daily volume bigger because we aggregate all the volume available, then asset manager will be able to take bigger position on European instruments. For retail, it's quite specific, and something that we really wanted to add on top of the regulation is allowing retail to increase their level of trust on the equities and ETF markets by, one, for sure they will get access to the same data as the rest of the industry, but we will also provide them with a small tool allowing them to compare the quality of the execution of their broker when comparing with all trades done at the same time on the given instrument. So if I take now a bit bigger of elevator view on the grander scheme of schemes, it's really important. This technical element is an element also that will feed the European construction because of what I was mentioning, this triggering of the virtuous cycle. More investors and investors able to take bigger position on European instrument will facilitate capital raising for the different companies, will offer better valuation also on the different instruments, and again, continue this virtuous cycle. So after 10 years of long discussion on this topic, it's finally getting concrete. So our go live is planned in July this year, so a very concrete element of the implementation of a virtualized single market in Europe.
And I've been often among those who were considered maybe by the European Commission a little bit downbeat on capital markets union successes so far, but I think this is one of the pieces of legislation that really have made a difference. Of course, I don't want to be too starry-eyed, so I hope we will have a debate on the compromises that were made and the things that still require attention and maybe progress, but indeed it's quite an achievement. Better late than never. Henrik.
All right, thank you. So I represent Nasdaq, and as you might know, we operate six exchanges in the EU, and then also the exchange in Iceland, and of course a market in the US as well. So on MISP, and of course now with the retail focus, a couple of comments. So overall, we believe that the MISP package is a good one, but as always, it's all about the details. I mean, and that of course is still very much yet to be seen how it's implemented, and of course how the trialogue kind of ends up with, because it's really, for example, if we start with the supervision aspect, I mean, yes, we think it's a good idea to centralize supervision to some degree, where the end goal should be to make it so that we really have a level playing field and that we don't have different interpretations across the member states. But on that notion alone, to me, there are many ways of getting to that end result. In my books, it doesn't necessarily mean a fully centralized supervisor. All we need is someone that then can be there to step in when we see clear differences in interpretations. Because even today, on a member state level, we hear a lot of, for example, banks complaining that depending on who you deal with at the national supervisor, you might actually be getting different interpretations. So that's, to me, just an example that a centralized supervisor does not necessarily mean that it's a full level playing field. It's all about how you implement it. And then, of course, one shouldn't forget about in some areas, the importance of kind of having a local touch with the supervisor, which of course I believe is behind the Commission's idea to leave, for example, MAR MAR-related supervision still at local hands, which then again raises another question, which is that will we really get efficiencies out of the centralization of supervision, i.e. will the costs then be actually lowered? Then that's back to how will it look like, this centralized supervisor. I've already been told by some people kind of close to this that it's not even reasonable to expect that we would see lower supervisory costs based on the centralization. And then, of course, if that's the ambition level, then not much maybe to expect from the outcome. But anyway, we think it's a good package. We support centralization of supervision. Then if I may also comment on the post-trade side, that's where we see the most benefits potentially coming out of this, because to a large extent I would say that today in the CSD, the settlement layer, you don't really have true competition today in Europe. And the package, MISP package, best case, will actually help finally deliver some level of competition. And of course we all know what competition means to fees and commission levels. So that's to me the space to watch. I mean, will we really have issuer choice and also links between the CSDs across Europe? Because today, to me, that's maybe the biggest item preventing true cross-border retail trading. Because again, you can't trade if you don't have, settlement in place as well. So, and that, in my understanding, is the one driving quite a lot of the costs. And then maybe if I just can also briefly mention digital assets, that wasn't actually covered much in the opening remarks by Tatjana, but certainly watching carefully what's now done in the US with tokenization. I mean, they are moving fast. I mean, it could be that before year end we will actually have a first trade on Nasdaq in the US where the retail or other investor can actually choose to have the custody of that trade in a tokenized format. So this is by end of this year. And hence we strongly think that we should maybe try to advance the DLT pilot related aspects in the MISP package to maybe get them in place before potentially the 2029 timeline that we are facing, as I understand it, for the overall package to actually be implemented. So, because again, I mean, just a lot can happen in a couple of years in the tokenization space. We certainly believe in that. Tokenization could actually be the not the silver bullet, but really the catalyst for a more efficient market, then also making it more efficient for retail investors. And maybe if you may, just final comment. In my opening remarks, I mean, it's great that EU is taking action here, but one thing that gives me hope is looking at the current situation in the Nordic countries, especially Sweden, but also Finland, Denmark, where we have a pretty good retail participation, also directly into cash equities. We have close to 20% of our trading in our markets done by retail today. So that kind of gives us, I would say, hope also on the national level to then introduce measures that kind of increase the retail interest in equities. Thank you.
Of course, I always think of the EU as a Nordic region expanded to a continent size. It would make us rise in many rankings, we know. Evert, you're in charge of investor protection at the European Securities and Markets Authority, ESMA in Paris. Over to you.
Thank you, and good afternoon, everyone. My name is Evert van Walsum of ESMA. So first, when I got an intriguing question, so what will the MISP bring to retail investors and retail investor protection in general? I had to think for a moment. But I think both Alexandra and Tatjana were totally right in saying the more efficient capital markets work, less friction there is, the lower the costs will be in the end, and that should mean something for costs for retail investors to begin with. But clearly competition is then necessary. But also this is brought by the MISP package. I think if you look at the MISP package, there are genuinely valuable proposals in there that will lead to further integration, less fragmentation, less national gold plating, which could all make a real difference. I'm glad that in the panel I'm joined by the CTP, which I think is a very valuable addition as well, and also a nice link to the upcoming RTS on best execution, which is clearly quite relevant to retail investors, because the CTP should bring the benchmark pricing where the RTS refers to.
I know it's unnecessary with this audience, but I'm still kind of feel duty-bound to do the acronym police. So by RTS, I guess you mean regulatory technical standard, right?
Yes, totally. So I will, from now on, explain all acronyms around. But you're right. It's a habit in this place to talk about acronyms. But RTS means regulatory technical standards. In the SRU, which I won't really explain, the broader context, there's also the situation of, I think, the saving and investment accounts, SYA, which I think are very promising next to pension reform that Tatjana already referred to. By the way, my compliments to Tatjana to be able to summarize the whole MISP proposal in such a profound way. Very good. And finally, last but not least, I think still the risk story and investor journey in general. When it actually happens, the risk, because it's still a bit of a cliffhanger, there are some really good elements there as well. So enhanced disclosure is still in the making. So the key ID, key information document will likely be revamped in the right way. Also, there will be distribution cost reporting for the first time. So ESMA produced a report on distribution costs. It was a one-off, but there will be distribution cost reporting more ingrained as well, which will actually help in transparency for retail investors. And there will be a feasibility study on a comparison tool where actually retail investors could then compare those products. So I think these are all things still to remind in a very, very difficult file like the risk. Thank you.
Thank you so much. Tanya, back to you. You already gave us your vision, but any reactions to what you just heard?
Plenty.
3 minutes.
I'll try.
Little square.
First and foremost, and this is my hobby horse topic that I love, just like you, Nicolas, the tape, consolidated tape. So I think Eglantine summarized it very well. I think something that she omitted to say, and probably wisely so not to create tension in this panel, but I will not shy away from mentioning it. The tape, as currently designed, will not have information on the identity of the trading venue, where the best price is going to be. So you would know what the best price is, so what we call EBBO, so European Best Bid and Offer, but you will know where. So it's great stuff, so investors can use it, of course, but as long as they don't know where, that's an issue. I think there is a lot of value in the tape already, but I think we can do better. We can enable the investor to do better, and we, in order to achieve that, we need to ensure that there is attribution, what we call attribution to a value. So you actually don't know just what the best price is, but also where you can find it. And this is what MISP is putting on the table, and where we're facing a lot of, let's say, resistance from some member states, because the issue is extremely divisive. And those of you who have been following the MIFIA review a few years back would know that very well. So this is one point. Thank you, Donkey. There are some, I'm glad to hear there are some supporters in the room. Then something that I think Henrik mentioned on centralized supervision. I think I agree with lots of the things that Henrik said. So I think it's not centralized supervision for the sake of centralized supervision. It's centralized supervision in order to create better, more effective and more efficient supervision. So I think this is the premise. I think a lot will depend on design, on what comes out of negotiations, because this is the bit where negotiations are the most contentious, putting aside the tape. And because, of course, we're talking about a transfer of national powers, national autonomy in many respects, and this is always, by definition, very political. But I think the decisive element is going to be the actual setup of the centralized supervision, the ability of ESMA to deliver on its mandate. And having said that, what is important to consider in this respect and how the success should be measured is not just by looking at the fees, supervisory fees, that entities will pay, but looking at supervisory fees and their cost savings that they will achieve by not having to comply with 6 different supervisory guidances. And that is going to be, so only jointly looking at this element and supervisory fees, I'm not questioning that, but jointly, we would be able to establish whether supervision actually delivered, whether we delivered jointly on the objective of making our supervisory landscape more effective, more efficient, and generally more adequate for the age we're in. Thank you.
That's great. Thank you, everybody. I think the scene was very powerfully set. I have a few questions. Maybe starting with you, Eglantine, do you want to react on attribution?
I said it. No, it's attribution. So we know that there is demand for attribution, and typically when we talk about best execution, indeed, knowing where it's coming from can allow to use the tape for best execution. We also believe that there are a lot of use cases already with the current version of the tape. So in what we have defined from an architecture perspective, we've made sure that the shift will be easy to make. When
exactly, the infrastructure is there.
Yes,
right?
and just to clarify, we are not allowed for now to provide the attribution because there was sometimes some misunderstanding saying that we were not choosing not to do it. No, that's we get the data for free because we don't provide the attribution. So for me on this topic, it's really. I think nobody can question the fact that there is a need for that value. The key question is the business model around it.
Okay.
May I comment on
yes,
that?
please.
Yeah, okay, thank you. So yeah, on the tape.
On the business model, especially.
Yeah, on the attribution, I mean, as most of us know, it took several years for us to kind of reach a good outcome with the EU tape. And part of the package, as I understand, was that we go live now in July with the scope that was agreed based on a painful discussions, and then we do an assessment. We assess how the tape delivers on the expectations, and only after that we then take the next steps. So to me, I somehow fail to understand why would we now kind of break that package and start rushing in changes before we see what the tape actually delivers in real life. And again, I mean, I guess one has to mention, I mean, this clearly, maybe the biggest worry I have with the attribution model is that then the risk of folks actually using the tape to trade becomes much higher. And there are these latency issues where the tape, it's going to be great for many use cases, but it can never be the fastest available source of information compared to the direct feeds. And that's just, that's physics. Nothing you can do about it because it just takes time to aggregate the data into, be it Frankfurt or Bergamo or whatever the location will be for the tape, as opposed to then having direct access from the data center, be it in Stockholm or other locations. So that's always been our main concern, being somewhat against attribution, at least day one of the tape, to be clear.
Interesting.
Yeah.
Tanya, do you want to react to that last point?
I can react. So my views. This is precisely the tension I was talking about, but I love it.
Very good.
No, I mean, okay, I am well familiar with the position of many exchanges. Now, I don't necessarily, with all due respect, buy the argument of the tape will become the trading tool because people don't understand what they're doing. I think we should place a bit more trust in people to actually understand what it means. And I think we need to also be clear about the objectives of the tape, and the objective of the tape is best execution. I think this is quite clear. Just to give you a comparison, the tape that exists in the US, which is a trading tape, because it's part of the order protection ruling that exists in the US, because you always need to deliver on the national best bid and order, the NBBO in the US. So you actually use the tape for trading and for knowing what the best price is. So that tape in the US is 1,000 times quicker than the tape we're building in the EU. So it is clearly not a trading tape. It cannot be a trading tape, and I think we've been very clear from the beginning, it's not a trading tape. It's a best execution tape. But in order for it to deliver fully on the mandate of best execution, and just to say the tape as it already stands is a huge step forward. It already is, there's a lot of use to the tape as it is today. But if we're not upfront that we can reach the maximum potential of the tape by ensuring that this information is there and it's easily added there, do we actually need to do an assessment to achieve that?
Excellent. I said I wanted this to be a conversation. It is a conversation. That's good. Martin, Henrik told us that there was, he didn't put it exactly in those terms, but I understood he described a very difficult trade-off between supervisory integration, which at this point is understood as centralization within ESMA, which is good for the single market but loses the local touch, and the need for local touch, which, because of the diversity of the EU, different practices, different stakeholders, to serve market participants well, and this is particularly obvious to state something very evident when we talk about retail dimensions of the capital markets. So that trade-off is not easy. The SSM in banking does it a certain way. Daniel Nui, its first head, used to say it was the best of both worlds because it was a single decision-making organization, but with local knowledge and interaction with market participants. How do you assess MISP on that prism? Right? Is the way MISP deals with supervisory integration the right one? How do you look at it?
Thank you for not questioning me on the tape. Although I had a...
This question was not staged.
I'm mentioning it because I had a couple ideas, but I will get back to this later. On the supervision and governance shift towards ESMA, with also local supervisors being involved in MAR, I think we see this very positively, reducing regulatory arbitrage, and this is something that is very important. Also for crypto asset service providers that are not maybe the center stage of this discussion, but still important to mention that risks for those activities are quite high as well. When it comes to simple trust in capital markets, I think what's important is to say that we want Europe to be the home bias and not national markets to be the home bias or capital flows to go outside of the EU. Therefore, the more trust you have in the European system, less regulatory arbitrage, transparency, and supervisory convergence, the better for retail investor. Also to think European and not only home when they invest or outside of Europe. So that's one point I'm happy to make. On what's been quickly mentioned on the CT. I would like to get back to it because I also heard Esma mentioning best execution and the CT as a tool. Of course, the primary tool for retail investor would be best execution. Of course, it would never be a trading tool for, first of all, especially if you don't have attribution, something that most of our members would currently regret, because if you don't have attribution, you don't really can challenge your broker not to have a connection to those venues. But on top of it, latency is not something that retail investor can deal with. But also, you are limited currently in terms of trading venues that you can access. Therefore, the pre-trade information is important. We will not say that attribution is not important as well. However, best execution check is where the added value will lie first, of course. Beyond discussing an impact assessment on the tape, I think we can already foresee the impact of the tape, but we need to foresee it with regulatory technical standards and best execution, which currently you have policy-based execution criteria with different criteria to manage. But the tape is not mandatory, and this is maybe of a problem. We need to have a same benchmark to compare best execution practices through different brokers. So that's one point I wanted to make on the tape, without being too prescriptive, not too touchy, hopefully.
And thanks for mastering the art of pivoting from the question to your response. So Evert, you are also welcome to pivot to the tape. But I have a question actually about the role of ESMA. I was listening to Verena Ross yesterday at another event in town. She made the case that, you know, it's great that MISP integrates, I think she said, centralizes supervision at ESMA. But actually it shouldn't be the case for most market segments. Most of the capital markets activity should remain supervised at the national levels. This is the way it should be. Which is kind of an intriguing point for ESMA to make. When you look at details of governance, maybe it can be understood. But since Verena has commented on what ESMA should and shouldn't be, which is, of course, ultimately a matter for the co-legislators, I cannot resist asking you to comment on this. Since she's still your boss, but not for long. How do you see that, my jokes aside, on substance? Is MISP the right balance in terms of the scope of supervision, and particularly of direct supervision of ESMA? Is it just a step in the right direction? What should the steady state be? And again, apologies for asking an unstaged question, but I would be very interested in your kind of big picture vision.
So thanks for that unstaged question. So I kind of expected this one coming from ESMA, so it's not completely unexpected. First of all, I will certainly not contradict my chair, as you can imagine. So I will certainly underscore what she has said. Not sure what she said apart from what you've said, but it's that's where we are. But I think it's fair to say that she's right. No, all jokes aside, I think if you look, first of all, so ESMA stands ready to accept anything that the co-legislators will decide upon. So that's the framework that we look into. If you ask me about is the balance right, I think there's always fair arguments why proximity is relevant, and why there are all kinds of national ties to a certain entity that requires that proximity. So that is a fair point. But if you then look at the proposals, if you look at what is actually proposed as direct supervision centrally in Europe, that is significant entities in trading and post-trading that are significant in the sense that they're cross-border, they're offering across Europe. Usually they are, hubs we're talking about, and there it does make sense to centralize this, because you can also imagine the cost of this convergence, And by the way, I would also like to flag the cost of convergence that ESMA has to do to line up national requirements and NCA supervision. We should not forget how costly that actually is. And if you look at the 350 staff actually that ESMA now has, most of them are involved in somehow in trying to align. That's also a cost to take in consideration that will be less if you centralize. I think the exception is the costs, so in the crypto space. That is all, which is quite profound, because there you have a lot of proximity, questions, fair questions. If there is a retail investor who has a complaint, where does he or she go to? Is that the national NCA or ESMA? So how does that work? That needs to be done. And the question is, how is this implemented? So there's a lot of devil in the detail, how that will be implemented. But also there, if you see how much time ESMA now spends on trying to converge this new framework of MiCA, there was certainly an argument to do this centrally from the beginning, because then we would have avoided all kinds of arbitrage, all kinds of questions about how to interpret various...
You're not asking for an assessment of MiCA before we move to the next step?
Yes, I would like to do the assessment as well. No, I don't. So thank you.
Thanks very much. Tanya, my last question to this panel in this round. One thing you referred to in your last intervention was the ability of ESMA to deliver on its mandate. I think this is a very important concern. Now, I have to make a disclosure. Not only am I conflicted here because I'm a member of the Scientific Council of Better Finance, which I'm very honored to be, but I'm also an independent non-executive director of a trade repository which is supervised by ESMA, the one owned by DTCC. Let me be clear, I'm not speaking here in that capacity, and it's also not in that capacity that I will ask a question to Tanya. It's based on my work as a policy scholar and on things I hear from anybody else than the DTCC trade repository. So ESMA has a bit of a reputation in the marketplace as being not a very risk-based supervisor, being very kind of, have a lot of boxes to tick, maybe, as Jean-Claude Juncker, some of us remember, tended to say, big on the small things, small on the big things. Is that deserved? How will MISP change it if it is? How do you think of ESMA in terms of supervisory performance and supervisory effectiveness?
So maybe let's start from the foundation, from sort of accepting the fact that in terms of supervision, the current supervisor mandate, direct supervisor mandate of ESMA is very limited. So you cannot judge, I think, what ESMA can do, with a very different mandate, with a very different structure and decision-making process, and compare it to what ESMA does today. What we've put on the table is a proposal that revisits how decisions are made, by whom they're made, who are influencing those decisions, and that is not a small thing, because let's face it, I'm participating to lots of standing committees in ESMA, which is always fun. But what you can see a lot is there are frequently national interests coming into play. So a lot of convergence that have just been convergence tools that have been mentioned, they look very good on paper. In practice, it's extremely difficult to use them, because when you have 27 member states around the table, they always find reasons as to why this or that Q&A doesn't work and what this should imply and how we need to change it. And then because ESMA is a consensual body and strikes to be a consensual body, those discussions take forever to result actually in a Q&A. If you upfront address this and you say, well, actually, we remove the national dimension, we make ESMA truly independent, we give it to its powers to decide on things, in an effective manner, I think they can do things. But I mean, it's also on us, on member states, on the parliament, to design the mandate, to design the governance of ESMA in a way that they can do their job. Because today, in many cases, they're constrained by the weaknesses of the current system.
Everett, I cannot leave that without giving you the chance to comment.
No, thank you, and I appreciate that. So I think there are two things. I think I'm less pessimistic compared to Tanya saying, you know, it takes forever. I think the board is effective in the way it can be, but indeed it's 27 member states all having their thoughts, also culturally different, also an approach. So I like this story about ESMA not being risk-based as a supervisor, because I always wonder where that comes from. If you work at ESMA, you get to see, you know, have a look into the kitchen of NCAs, how they actually supervise. So what
Can
ESMA...
you tell us more about that?
Yeah, what ESMA typically does is always also for themselves, and that's also the role of the management board of ESMA, is to get the best from those NCAs, to replicate this at a European level. So I'm always a bit surprised about, you know, this is a reflection of what is out there with NCAs. That's what ESMA does. So in that sense, it's interesting to see. However, I certainly agree with Tatjana to say is, you know, what the MIS proposal brings, also on governance, are really sound proposals, because they're there for a reason, and a good reason.
And of course, NCA is a national competent authority.
Yes, apologies. It's a national competent authority.
I can't resist. Okay, questions from the floor. Introduce yourself, be succinct, pretend to ask a question. By the way, panelists, also be succinct in your answers so that we can take a lot of questions. And if that's relevant, please also indicate to whom your question is addressed, if it's addressed to a particular panelist. And now, please help me with the first question. Yes? Wait for the microphone, please.
So my question is slightly more diverse compared to what you have been discussing.
I did suggest you introduce yourself.
I will. My name is Ringo Alagwa. I am the Chief Risk Officer for Lender Market, which is a company registered for conduct of business and rules by the Central Bank of Ireland. Now, my question is slightly different and a bit of divergence, a cognitive bias on my own part in this question. So it's to Tatjana. First and foremost, can I say a big thank you for your well-worded, statements around all the initiatives you're currently taking. And you talked about the elephant in the room. So we, as a business, provide alternative finance, slightly different, but you talked about educational literacy, which is a very, very important part. We want our industry to be referenced in communiques by the Commission through various communications to the NCEs that they go out to, because we feel unheard, we feel unseen. In fact, we will categorize ourselves as a footnote, and we're hoping that we can have, being referenced, because it helps us.
I apologize for a second interruption, but I did say be succinct, pretend to ask a question, so I repeat that admonition.
So to kind of round it up is we want to be heard and want to be seen, and we are hoping that we won't be treated as a footnote. So my question to you is, can you please take that as part of your consideration in communicating to other NCEs in relation to my industry?
Thank you. Other questions? Here.
Yes, thank you very much. Olivier Fine, CFA Institute. Question for Henrik. You mentioned something that I think is important earlier on. You said that individual investors, consumers in the Nordic regions have a higher propensity to directly engage in capital markets and equity markets. Why is that?
Right.
Maybe
yeah.
a third question, and we bring it back to the panel. Yes, please.
I'm Mirjam van der Stichler from the Transnational Institute. And regarding the decision making in ESMA, I also have questions regarding the advisory groups. Whether you think they are balanced enough, because my experience is not, and how that could be integrated in the proposals that you're making, because I agree you talked about the board, but underneath you have the advisory groups, and also for the retail investors, have they enough voice?
Thank you. So why don't we take it in that order, Tanya, Henrik, and then also whoever else on the panel, I'm looking at you, Martin, wants to comment on the last question particularly. Tanya.
So the first question, to the extent it was a question and not a request, I mean, we don't validate, we don't endorse individual financial literacy programs by anyone, so I don't think we can make an exception in your specific case. We would very much support you continuing to promote your financial literacy objectives, and if you want to engage with the Commission, we're there to hear, to listen you out, if you have any ideas, specific ideas as to how Europe can help. But I'm afraid we don't do endorsements of individual financial literacy programs. I would also suggest in Ireland, now that we have a system of ambassadors for financial literacy, that you reach out to them, because that would also allow you to find a better footing within the Irish community when it comes to financial literacy issues. So maybe that would be the reaction to your point/question. And then on advisory bodies, do you mean stakeholder groups, or do you mean stakeholder groups? Okay, stakeholder groups. Well, I think I don't think the proposal makes any suggestions in that respect. I think there was already a requirement for those stakeholder groups. You can correct me if I'm wrong. That they should be balanced and they should represent a wide spectrum of interests. If you have any specific concerns, I mean, you can definitely reach out to us and maybe to us, my colleagues as well, because, of course, those are being formed on a case-by-case basis. And I know that there is a secondary market one that is quite active, so I haven't heard about complaints about the wrong balance within that group, but very happy to maybe speak bilaterally to understand better your concern.
Right, and then to the Nordic retail experience. So, I mean, it's nothing that can be done overnight. It's taken a long time. One could start the story from, if you look at Sweden, where the retail participation is the highest out of the Nordic countries. I would say one starting point would be these all-mans funds, allemansfonder, that they established in the 80s in Sweden, that really encouraged everyone in Sweden to actually start investing in equities first through funds, and then also the pension system in Sweden especially is such that a small part of your Pillar 1 pensions actually you get to choose yourself if you want to where they're invested, and that of course creates an incentive for everybody to kind of get excited about the market. And then I would also maybe again staying in Sweden. My take is that there already ages ago there was kind of a large political consensus, like their current finance minister nicely said a couple of weeks ago in an event, that they concluded across all major parties like 20 plus years ago that the stock market is way too good of a thing to be only left for the wealthy and the rich, and i.e. everybody needs access to it, and that's been kind of the foundation for a lot of decisions around removal of the inheritance tax, for example, and now the investment savings account that the Commission is now proposing to be expanded across all of Europe, where one key element under that account is simplicity. I mean, you don't need to care about the taxation of your equity savings, even if you trade actively on a daily basis, because the tax is based on the annual value of the account. It's automatically taken care of by a broker. Because in my experience, that's a huge hurdle actually in getting people investing in equities. It's deemed to be complex. I mean, and it's not a joke. I think it's a study that tells that on average we'd rather go to the dentist than listen to a financial advisor. So I mean that tells you how the challenges we have, and this of course brings me maybe then to the financial literacy, i.e. that then of course it's all about that, which again the Commission I think wisely now is embracing across all of EU, that we would just through different mechanisms make it so that people actually know more about the impact, for example, of costs in your financial decisions. So.
Can I just ask a quick follow-up? Why is this not the blueprint for Euro? I mean,
Oh, it is.
Oh, because it's taxation. The answer is taxation.
No, Nicolas, can I just...
Absolutely.
It is. I mean, what the Swedes did actually in like 70s, I think the Brits did later, so they introduced their own version of ISA. So it is ISA, then it's ISA in the UK. We called it SIA, just to be different, but basically it's the same thing. And we actually drew inspiration from what the Swedes did. And I think what Henrik said, the key component of it is taxation. Both the complexity, removing that complexity, and tax incentive. So there is a cost, a price tag attached to it for the government. So there needs to be acceptability at the government's level that they're prepared to assume that cost for the greater good. Yes, to incentivize people, because people do need to be incentivized. You need to steer people. They need to understand, of course, but they also need to have incentives to do it. But there is a cost, as I said, and there needs to be an acknowledgement at the level of the government that they're prepared to pay that cost for the greater good. And I'm not sure we are in the same situation with all member states. And of course, taxation, as Nicolas alluded to, is a deeply national issue where we need national buy-in.
And national decision. Yes, I like it. It's becoming a conversation. I'm losing control. It's great. Henrik.
Yeah, if I just may add that, of course, it helps, and one could debate what's the chicken and what's the egg here, but looking at the last 60 years, we have the best returns actually in the equity markets in the Nordic countries. I mean, Sweden is number 1, Finland is number 2, Denmark is number 4, kind of globally, looking at all equity markets last 60 years. So of course that has helped keep up the momentum with the retail clients. The returns have been great.
And it's even better when there is some inside benchmarking among Nordic countries. Eglantine.
Yeah, maybe just reacting on this, because it's quite far away from my topic, but I think it's a matter of culture as well. In many countries, in the media, when you listen to people talking about companies and shares, etc., it's often negative.
Capitalist.
Capitalist. So basically, the dividends are presented negatively. People investing are presented as unreturned, etc. So maybe there is also about this virtuous cycle. If we can manage to change a bit just the shift and the perception of financial sector in the mind of people, then potentially the lawmakers and the tax people setting the tax locally will change their mind and move from a financial transaction type to incentives to invest in the European economy.
I don't remember which French official it was, maybe you remember, who said Capital Markets Union, we don't like it so much, there's capital, there's market. That person was not Swedish. Martin.
A quick reaction to all that's been said is that, to start with the end of what Eglantine said, I completely agree. There is also a social role of investing and financial literacy, but not only. Shareholder rights should really promote this aspect. So you don't only invest for your own benefit, but also to gear society in a certain direction. Therefore, lots of missing pieces in the puzzle of the SIU and the MISP, which is accountability and redress, collective redress for investors, and this is something that should also be considered as a second step. I hear that Baltic markets are vibrant and provide returns, but this is also markets where you have the most IPOs and people can trade SMEs more easily than anywhere else. So this is maybe for the next panels, but that's a very important point to discuss. And when it comes to retail involvement, investor involvement in advisory committees at ESMA. Of course, we always call for retail to be empowered and, of course, consulted. We are next to plethora of industry in those advisory groups. However, we like the fact that investor protection is ESMA duty, but the fact that simple products should be promoted, and we often remind this, and this should remain a core objective of ESMA, along with any other initiatives that take place. Let's talk about SIU accounts, for example. We're working on a retail blueprint for this, where we consult our members, and we see that simplicity first can enable portability, competition, and of course, for all of this to work seamlessly, we need integration of capital markets for competitive accounts to be available cross-border. So yes, this is a quick roundup. Thank you.
Evert?
No, and just interested in knowing more about the stakeholder composition. You can see anyone who does the stakeholder composition in the stakeholder working groups is ESMA. So maybe afterwards you can tell me what's wrong. What I can tell you in the consultative working groups that we have with standing committees or the Securities Market Stakeholders Group, SMSG, there is a very considerate and diligent process where we really look into what industry is represented, retail investor representatives, gender, nationality. I think it all goes into the mix, but it starts with an open call where candidates actually supply themselves, basically. So, and then the mix goes on. This is a very serious process, so I'm curious where that comes from.
Okay, there will be follow-up conversations. Any other questions? Yes.
Thank you very much. Jean-Marie Durand from the French Asset Management Association. Thank you for this lively debate. I've got a question, short question. What are your views on the ESMA competitiveness mandates, having in mind that it would be a secondary objectives after the financial stability and investor protection objectives, and only for regulatory matters and not supervisory ones? Thank you.
Interesting question. Some of you were probably at the event this morning with Claudia Buch, who got the same question, but ESMA is not the SSM, so I'm curious to hear views on this. Maybe a last question, because we're getting close to our panel end. If not, that question was pretty multifaceted, so I'll ask all the panelists to give views on it, starting with you, Evert.
Yeah, thank you. It was a question that's been asked quite a lot, actually, and also given the fact that in the UK there is actually this insertion of competitiveness with supervisors. I think, first of all, it's not part of the proposal, so it's not there. Our view is that the main issue where competitiveness comes in is regulation, and therefore we have the Commission who takes competitiveness into consideration with the co-legislators to get the balance right, and therefore then NCAs supervise based on that regulatory initiative. I think if you look at the UK, the reason why it was inserted in the mandates of supervisors was because of the increase of regulatory powers that they got, that ESMA doesn't have nor gets. So in that sense, it makes less sense to have this. Competitiveness also plays a role in our CBAs that we do anyway. If we work on cost-benefit analysis, CBA. On to see what kind of level 2 impact we would have. But there we always notice when doing these CBAs that the main decisions are taken at level 1. So in that sense, we feel that it's in good hands with the Commission, with the co-legislators. If there would be a change in any time in the future, that ESMA would get bigger regulatory powers, then it would make more sense.
Okay, my 2 cents on this, because I think that when we talk competitiveness, we always have to find, of course, balance, especially in this current discussion of consolidating markets. We want operators to compete for, of course, retail flow, but we want markets to be integrated. So yes, delicate balance, and the option chosen by the Commission is the balanced one, although incremental. When it comes to the overall discussions on cost-benefit analysis, or else when it comes to cutting red tape, we don't call for deregulation, but harmonized rules, and more simplification should not come at the expense of protection, and you will have more protection. Maybe you could cut some more red tape, but let's not start the other way around. So, for example, start with redress before reducing reporting requirements. That's one example. You should not start things from the wrong end, but that's quick takes.
Eglantine?
Maybe I will echo what Tanya was saying a bit before, is basically in a world where we see more and more regional pools rising. There is also value and competitiveness value of Europe as being seen as maybe not the most, the region where you have the best returns, but at least where, as an investor, your position are protected. And if you compare to Asia and the US in the current framework, there is a competitiveness nature, and it's not being very politically correct, but I truly believe that that's something that should not necessarily change. After, of course, there are ways of doing things faster and more in a more seamless way. I don't know if it's proper English, but so yes, for me that's basically this approach to investor protection is also what will channel investment from other regions towards Europe, and that's what we all want to do.
I can't resist from asking, is it your impression that investor protection at this point is being weakened in the US and that's an opportunity for Europe, or you wouldn't go that far?
For me, the question?
Why not?
It's just like basically you see like the overall structure, and that's where the finance echoes geopolitical and different dimensions. So things are the relative slowness of changes is also something that reassures investors. When you're putting all your money for your retirement scheme, you don't want things to move overnight because somebody has decided otherwise.
Interesting. Tanya?
Well, I will start by saying, of course, competitiveness is important, and politically it is at the top at the moment. However, and I will echo, to no surprise of most of you, that what Everett just said. For me, there are a lot of parallels that are being drawn between us and the UK, how it is done in the UK, while the starting point is very different. Under the new system, FCA assumes a lot of legal powers, basically adopting what we would call primary legislation in the EU, where we would actually need to propose and then for the Parliament and the Council to agree on. So those powers actually are being given directly to FCA in a vast area, spectrum of different topics related to capital markets. So I can see why they would think of that, but in our situation things are very different. Of course, it hasn't been said, but I think it was somewhere in the back of our minds, the Moroni doctrine, which is quite important. So whatever ESMA does, we cannot delegate to ESMA our responsibilities that are given to us under the treaty, and it is in many cases, empowerments that are given to us to co-legislators that afterwards it's for the Commission to use, to exercise. So we are the ones, and sorry to sound perhaps a bit megalomaniac, hopefully I don't, we're the ones who are supposed to ensure that competitiveness filter, and not ESMA, who is there to provide technical expertise to decide what, in their view, is necessary, is relevant, and then we can apply that filter. And maybe ending with a small anecdote. Maybe not many of you know that in Ireland they had a competitiveness mandate just before the big financial crisis, and then it was removed.
Henrik?
Yeah, I would echo a lot of what's been said here. I mean, obviously financial stability should be at the very core of the supervisor's mandate, and that shouldn't be compromised. And certainly as well, I mean, if you have a pure supervisor like ESMA, then of course this adding competitiveness into the mandate is maybe not that relevant as opposed to the US or UK models where you have more of a integrated supervisory regulatory powers, because then again, not sure how it would look like, the competitiveness supervisor. I mean, it's as a supervised entity, of course, one would somehow hope that sometimes it would be somehow taken into the judgment, but then again, it might be a slippery slope. So, yeah.
Many thanks. I think these are actually very helpful clarification to a somewhat muddled debate on mandate. So thanks to all the panelists. Thanks for their wonderful time discipline. We're 3 minutes late, but that's my fault. Sorry, little square. The little square still there? Yeah. I hope if there are any financial advisors or dentists in the room, they didn't feel offended. I'm very grateful to the panelists, to the audience for engagement, to Better Finance for inviting me to do this, and best wishes for the rest of the afternoon. Thank you.